Good afternoon. I'm your host, and welcome to Kenya News Update today. We're coming to you live as President William Ruto prepares to launch Kenya's 2026 diplomatic brief at State House in Nairobi. This is more than just a policy document. It's being framed as a strategic blueprint for Kenya's place in the world over the next 2 years. We have our panel of experts standing by to break down the key themes, the ambitious financial proposals, and the critical debates surrounding Kenya's foreign policy direction. Let's set the stage. President Ruto is addressing a gathering of heads of mission and international partners. The core message, as previewed, is one of achievement and ambition. The brief will highlight what the administration calls an expanded diplomatic footprint, a renewed foreign policy focus, and concrete initiatives in areas from diaspora engagement to climate action. But the headline grabber, even before the full document is released, is the financial ask. The president is pitching a colossal 5 trillion shilling national development plan. That's approximately 40 billion US dollars. And he's pitching it as a debt-free fund, urging diplomats and international investors to back it as a way to finance major infrastructure and social programs without, in his words, raising taxes or adding to the national debt. This is a massive proposition. Joining me now are our analysts. First, we have Dr. Amani Okoth, a senior fellow in international relations at the University of Nairobi. Welcome, Dr. Okoth. And with us is economic analyst Michael Cheje. Thank you both for being here. Dr. Okoth, let's start with you. This diplomatic brief comes at a crucial time. Kenya currently holds a non-permanent seat on the UN Security Council. It's a key player in regional security in East Africa, and it's positioning itself as a climate leader. What is the strategic significance of launching this document now? Dr. Amani Okoth, thank you. The timing is indeed deliberate and significant. We are at the midpoint of President Ruto's first term. This brief serves as a report card and a forward-looking manifesto. It allows the administration to showcase what it has achieved diplomatically since 2022, things like the successful bid for the UNSC seat, the hosting of the Africa Climate Summit, and the deepening of ties with strategic partners like the United States under President Trump and key European nations. But more importantly, it sets the agenda for the remainder of the term and beyond. It's about locking in priorities, regional integration within the East African community, economic diplomacy to boost trade, and managing complex global partnerships in a multipolar world. The message to diplomats in the room is clear. This is our map, this is where we are going, and we want you on board. Host Michael Cheje, let's turn to the economics. 5 trillion shillings, $40 billion. A debt-free fund, that's an extraordinarily bold pitch. From an investor's or a diplomat's perspective, what does this actually mean? How realistic is it? Michael Cheje, it's an audacious vision, no doubt. Let's break down the numbers. Kenya's entire national budget for the current financial year is about 3.9 trillion shillings. So, he's asking for a fund that is larger than our annual budget. The promise of it being debt-free is the key hook. He's essentially proposing a blend of foreign direct investment, public-private partnerships, and perhaps sovereign wealth fund-style structures to finance long-term projects. The pitch is, instead of lending us money that accrues interest and strains our debt position, which stands at over 10 trillion shillings, invest directly in specific, high-return projects. Think railways, ports, green energy grids, affordable housing. The established funds he mentions likely refer to vehicles like the Kenya Investment Authority's channels or new special purpose vehicles. The realism question hinges on credibility and project design. Investors will want to see bankable projects, clear legal frameworks, and guarantees against political risk. The diplomatic community will be asking, is this a coherent plan or a wish list? Host, let's visualize that scale for our viewers. The ask is monumental compared to our existing financial commitments. Host, Dr. Okoth, on the diplomacy side, the brief mentions an expanded footprint and renewed focus. What does that look like in practice? Are we talking new embassies, new alliances? Dr. Amani Okoth, both. Under this administration, we've seen a deliberate push to open missions in non-traditional markets. There's been talk of bolstering presence in Southeast Asia, particularly in Vietnam and Indonesia, and in South America. This is economic diplomacy in action, chasing trade and investment where it's growing. The renewed focus is thematic. Climate action is now a central pillar, not a side issue. Diaspora engagement is being systematized, recognizing the billions in remittances, which hit a record $4.2 billion last year, and the skills abroad. Security cooperation, especially in Somalia and within the East African Standby Force, remains critical. But the most interesting shift might be in how Kenya navigates the US-China dynamic. With Trump in the White House, the approach to Washington may be more transactional, while Beijing remains a crucial infrastructure partner. The brief will likely try to articulate a balanced, sovereign path. Host Michael, sticking with the financial pitch. Kenya's public debt is a constant concern for ratings agencies and citizens alike. The debt to GDP ratio is around 70%. How does this 5 trillion shilling fund proposal interact with that existing debt burden? Is it a solution, or could it complicate matters? Michael Che, the administration is presenting it as the definitive solution, a way to grow the economy without deepening the debt hole. The theory is sound. If you can attract equity-like investment into productive infrastructure, it boosts GDP growth, which in turn makes the existing debt more manageable. A faster-growing economy generates more tax revenue to service debt. However, the risks are substantial. First, execution risk. Managing multi-billion-dollar PPPs is complex and can lead to cost overruns that the state might ultimately bear. Second, it assumes a continuous flow of foreign investment, which can be fickle in a volatile global economy. Third, there's a potential crowding out effect. If the government is focused on courting foreign capital for mega projects, does it neglect basic domestic revenue mobilization? The promise of no new taxes is politically popular, but economists might argue that a sustainable tax base is essential for long-term stability. It's a high-stakes gamble. Host, let's look at that debt context. It's the backdrop against which this entire fund is being proposed. Host, we're getting reports that the president is now delivering the address. Let's listen to some of the key excerpts. President Ruto, our diplomacy must work for the Wananchi. It must translate into tangible benefits, jobs, investment, security, and a healthy environment. The 2026 diplomatic brief is our covenant with the Kenyan people and our partners. It outlines how we will leverage our global position, including our seat at the UN Security Council, to advocate not just for Kenya, but for Africa. The 5 trillion shilling fund is not a fantasy. It is a practical, innovative financing mechanism to build our future without mortgaging it. We invite you, our friends, to build with us. Host, strong words. A covenant with the Kenyan people and our partners. Dr. Okoth, the phrase diplomacy must work for the Wananchi. The common citizen is powerful. How does a diplomatic brief, often full of jargon, do that? Dr. Amani Okoth, that's the central challenge and the key political message. It's about making foreign policy relevant. For the citizen, it means, when Kenya negotiates a trade deal with the US or the UK, does it secure better prices for our tea and coffee? When we engage in climate diplomacy, does it bring in funding for solar power in rural clinics? When we have a diaspora policy, does it make it easier for a nurse in London to send money home or invest in a business here? The brief will be judged not by the elegance of its prose, but by its concrete deliverables. The mention of the UNSC seat is crucial. It's a platform. Kenya can use it to push for resolutions on regional conflict mediation or equitable global health responses. That has indirect but real benefits for citizens' security and well-being. Host Michael, the president, called the fund practical and innovative. From the investor's chair, what would make you see it that way versus seeing it as overly ambitious? Michael Che, practicality will be in the details. Investors will want to see the first 2 or 3 flagship projects identified, with full feasibility studies. They'll want to know the expected rate of return and the exit strategy. Innovation could be in the structure, perhaps a green bond issue tied to specific climate projects, which is a growing market, or blending commercial investment with concessional funding from development finance institutions. The red flag would be if it's presented as a vague pool of money for the government to allocate at will. That's not a fund, that's a request for a blank check. The diplomatic community he's addressing today includes representatives from multilateral banks and development agencies. Their reaction will be a key early indicator. Host, let's talk about regional integration, a stated priority. Kenya is part of the East African community. How does this national diplomatic brief fit into broader regional goals? Is there a tension between Kenya first and community spirit? Dr. Amani Okoth, it's a delicate balance. The EAC is moving, albeit slowly, towards a common market and political federation. A strong, economically vibrant Kenya is good for the region. It's the largest economy. But diplomacy can't be purely zero-sum. The brief will likely emphasize Kenya's role as a regional anchor. For instance, using its diplomatic networks to attract investment that benefits cross-border infrastructure, like the standard gauge railway extensions, or championing regional peace and security, which is a prerequisite for trade. The tension arises if Kenya's bilateral deals undercut EAC common positions, say, in trade negotiations with Europe. The language to listen for is whether the brief frames Kenya's success as intertwined with the region's success. Host Michael, from a pure numbers perspective, what are the key metrics you'll be looking for in the full brief to assess its economic credibility? Michael Che J. First, a clear breakdown of that 5 trillion shilling target. What percentage is expected from FDI, from PPPs, from multilateral institutions? Second, the projected GDP growth impact. If you inject that level of investment, it should bump growth significantly from the current 5–6% range. Third, job creation targets, tangible numbers. Fourth, the impact on the current account. Will these projects reduce imports or boost exports? And finally, the opportunity cost. What existing budgetary items might be deprioritized because the government is banking on this external fund? Those numbers will tell us if this is a strategic plan or a political vision. Host, we have to address the political dimension. This is also a document for domestic consumption. With the next election cycle on the horizon in 2027, how much of this is about building a legacy and a re-election narrative? Dr. Amani Okoth, inevitably, that is a factor. This is the administration's definitive foreign policy statement ahead of the campaign season. It allows them to say, look at our stature in the world. Look at the investment we are bringing. We are respected globally, and that translates to prosperity at home. The debt-free narrative is directly aimed at addressing a major public concern, the weight of debt. It's a powerful political message we can develop without burdening you or your children. The risk is that if the fund fails to materialize or only attracts a fraction of the target, it becomes a vulnerability. The opposition will likely frame it as a pie-in-the-sky promise. Host Michael, final word to you. Bottom line, in 1 year's time, what should we look for to know if this diplomatic brief and its grand fund are succeeding or stalling? Michael Che J, watch for signatures. Within the next 12 months, we should see at least one major financially closed deal that is explicitly linked to this 5 trillion shilling framework. A new geothermal plant, a highway concession, a large-scale agricultural project funded through this mechanism. If we see that, it's a sign of traction. If we see continued reliance on Eurobond issuances and bilateral loans for the budget, then this vision is stalling. The proof will be in the financial closing, not the diplomatic speech. Host Dr. Amani Okoth, Michael Che J, thank you both for your incisive analysis. As President Ruto concludes his address, the work of diplomacy and deal-making begins. The 2026 diplomatic brief sets a high bar, defining Kenya's global ambitions and proposing a revolutionary way to pay for them. The coming months will reveal whether the world buys the pitch. For now, from our studios, that's our deep dive. We'll have the full document analysis on our website. Subscribe to Kenya News Update today for continuing coverage. I'm your host. Good afternoon.